Hi, welcome to Main Street Macro. I'm Neela Richardson. This week, I thought we'd take a virtual field trip to Wall Street and to a specific neighborhood on the street known as the bond market. You see, while Wall Street is not the economy, there are times when the actions, behaviors, and beliefs of stock and bond investors affect what goes on Main Street for companies and consumers. Last week was one of those times. Long-term bond yields have been creeping up, and that's caused many of our friends on Wall Street to catch a case of the jitters. What's all the fuss about? Well, here are 3 things that you need to know on Main Street about rising bond yields. 1, bond yields are rising from historic lows. Over the past decade, the yield on the closely watched 10-year Treasury bond has averaged just a bit above 2%. With the onslaught of the pandemic, that yield plunged to well below 1%. But recently, it's been creeping back up to the levels we saw in February of last year before the pandemic hit. 2, rates are rising for the right reasons. In congressional testimony that the Federal Reserve Chairman gave last week, he said that rising bond yields was actually a sign that Wall Street was feeling confident about the economic recovery. And there's a lot for Wall Street to be confident about, isn't there? There's the prospect of more federal stimulus. There's the faster rollout of the vaccine. There's the likelihood that consumer spending surges when the economy fully reopens. All of these things point to faster economic growth later this year. But rising yields do have a downside, and that brings us to number 3. Rising rates cause borrowing costs to go up. That means higher mortgage rates, that means higher auto rates, which could dampen some of the enthusiasm from Main Street consumers to purchase these big ticket items. It also means that Main Street companies pay more for the loans that they take out to fund their businesses. The flip side is that in the past, we've seen higher interest rates actually prompt banks to lend more and increase loan availability to a higher swath of creditworthy borrowers. More loans available at this moment in terms of the economic recovery could actually be good news on Main Street. So while rising rates and rising yields may be jarring for Wall Street, rates that rise because the economic outlook is brightened may be just the kind of profitable trade that Main Street needs right now. For more of our insights on the week ahead, please go to adpri.org. Thank you for watching and be well.